Welcome to today's What Will Move the Market show. I'm your host Prem. It's Tuesday, December 2nd, 2025, and here is everything you need to know as the markets open for today. Wall Street wrapped up December 1st on a rather cautious note, with investors hitting the brakes after a strong streak in November. The Dow Jones Industrial Average declined by 0.9%, shedding over 427 points, while the S&P 500 dropped 0.53% and the Nasdaq fell 0.38%. The session was driven by a mix of factors, with concerns over a potential December interest rate hike from the Federal Reserve weighing on sentiment, particularly hitting technology and cryptocurrency-related stocks hard. Bitcoin took the worst hit, sliding 6.4% in its sharpest decline since March, sending ripples through companies like Coinbase, Robinhood and MicroStrategy, which all tumbled between 3 and 5%. Meanwhile, oil recovered slightly, with West Texas Intermediate crude rising 1.13% to $59.32 per barrel. Gold continued its strong run, gaining around 1% to hover above $4,280 per ounce, as investors sought safe haven assets amid the broader uncertainty. Turning now to our Indian ADRs trading overnight, the picture was decidedly mixed. HDFC Bank ADR came under pressure, losing 3.75%. ICICI Bank ADR also retreated, sliding 2.08%. Infosys ADR showed relative resilience with only a minor 0.17% decline. Reliance Industries GDR eased marginally by 0.33%. These overnight moves in the ADRs carry important implications for Indian investors, particularly signaling some caution among global investors toward India's financial sector, and reflecting broader concerns about valuations and rupee weakness that we'll address in just a moment. On the Asian front, this morning has painted a mixed picture with selective strength emerging across the region. Japan's Nikkei 225 index rose 0.4%, gaining over 200 points as investors there welcomed relative stability. The Hang Seng in Hong Kong followed suit, climbing 0.35%, while the Shanghai Composite on mainland China notched a small gain of 0.65% yesterday, with both indexes supported by optimism over potential United States Federal Reserve rate cuts later in December. As of the latest available data this morning, GIFT Nifty is trading around the 26,300 zone, suggesting a muted to cautiously positive opening for Indian equities. This GIFT Nifty level indicates the Indian market may open somewhere between flat and slightly positive, though the opening will likely hinge on whether domestic investors can draw support from the region's overnight gains or remain cautious ahead of the Reserve Bank of India's monetary policy announcement coming this Friday. The key takeaway for Indian investors from Asian markets is the consistent messaging around rate cut expectations, which, if it materializes, could support sentiment across emerging markets including India. India's manufacturing PMI slipped to a 9-month low of 56.6 in November, signaling some softening in factory activity. Meanwhile, the Indian rupee hit a fresh record low against the US dollar this morning, due to muted trade flows and limited progress on US-India trade discussions, a development that could influence both equities and commodities pricing during today's session. The RBI is expected to maintain its policy repo rate unchanged at 5.5% when it announces its decision on December 5th, though the market will be watching closely for any shifts in the central bank's forward guidance regarding future monetary moves. Foreign investors continue to net sell Indian equities for the fifth consecutive month, with December starting on a negative note, as they remain concerned about elevated valuations, the strengthening US dollar, and stricter taxation rules on FPI investments. Looking at technical levels, the Nifty 50 faces immediate resistance around the 26,300 to 26,420 zone, with the record high of 26,325 providing a strong hurdle. Support is placed at the 26,100 to 26,000 level, with a critical structural base further down at 25,850. As long as the Nifty holds above the 26,000 level, the broader trend remains constructively bullish. On the commodities front, crude oil remains at around $59 per barrel on the lower side, though supply concerns continue to underpin prices. Gold has staged an impressive rally in recent sessions, currently trading around $4,260 per troy ounce, buoyed by falling real interest rate expectations and safe haven demand amid geopolitical tensions and currency volatility. Silver has similarly surged to fresh record highs, now trading just under $58 per troy ounce in international markets, having doubled in value since the beginning of the year from near $29 per ounce in late December. These commodity moves have important implications for domestic inflation expectations and central bank policy going forward. For traders and investors stepping into today's session, the overarching theme is one of careful navigation through consolidation territory. With the Nifty entrenched in profit-booking mode near all-time highs and the broader market absorbing mixed global signals, a buy-on-dips approach remains prudent for those with a medium-term horizon, but intraday traders should exercise caution around resistance levels. The key risk to watch is any hawkish surprise from the Fed tonight, which could reignite selling in technology and high-beta stocks. On the domestic front, the rupee weakness warrants monitoring, as it could accelerate if the US dollar strengthens further post-Fed commentary. Meanwhile, keep an eye on how Bank Nifty sustains above the 60,000 psychological level, as it remains the sector driving broader market momentum. An important reminder for derivatives traders: SEBI's new index options position limits come into effect on December 6th, so ensure your algo systems and risk management protocols are updated to avoid compliance issues. Stay tuned for the evening wrap and send in your questions. Subscribe to this podcast to hear US every day. Thank you for joining me for today's morning market update.